Now, if you look at any of the available data for what is going on with current sales, you're going to see that it's decreasing. Now, I pulled up some data here to kind of help us understand, but we're seeing that Guitar Center is in distress. So they filed for Chapter 11 bankruptcy in November of 2020. This carried over with a $1.3 billion in debt, with a plan to reduce that figure by approximately $800 million. So as of late 2022, the revenues were approximately $2.6 billion on a trailing 12-month basis. But Moody's was downgrading their credit, and projection for 2024 were based on the optimistic assumption that consumer demand would grow back to pre-pandemic level. From what we can see, it hasn't. So since 2020, Guitar Center has shuttered 111 locations, including 4 in early 2025, leaving 167 active stores as of March 2026. Guitar Center, being a major player, well, they had to file for bankruptcy, and they had to shut down almost half of the stores that they had across America. If we look at Sweetwater, here it says that Sweetwater had the most dramatic pandemic-era rise and is now clearly in retreat. Sweetwater achieved $1.57 billion in sales in 2022, revenue growth of 9.5% year over year, and the third consecutive year exceeding $1 billion in revenue. By 2024, Sweetwater's online store revenue had fallen to approximately $764.9 million, down 0 to 5% from the previous year. For 2025, projections expected a further decline of 20 to 50. That's massive. That's 2 major American retailers. When it comes to Thomann, over in Europe, they are like the biggest distributor. They don't have a whole lot of available information that I can find by doing a Google search, but what I could find is that it says Thomann reached approximately $1.4 billion in revenue by 2023, reflecting steady upward trajectory. In 2024, revenue reached $1.55 billion, an 11% increase from 2023. In 2025, annual sales came in at approximately $1.54 billion USD, representing a year-over-year change of less than 0%, meaning they've plateaued after years of growth. Forecast for 2026 also projects sub-zero growth. Thomann employs around 1,500 people, ships roughly 25,000 products daily, and serves over 10 million customers across 18 language markets, and plans to nearly double their physical showroom by 2026. I don't know if this has occurred yet, but this is massive. This is a company that's letting you know they are not f***ing around. So Thomann's continued strength partly reflects their European market position and their own private label brand, Harley Benton, which insulates them from manufacturer pricing pressures. But even they are now projected to decline. So the sources for this is Thomann Financial and ECDB and Music Radar. Now, right here in my backyard, we have Long & McQuade. And from what we can see, they're kind of flying under the radar here. So it says Long & McQuade is a private company with limited public financial disclosure, making hard numbers difficult to verify. What we can establish is that Long & McQuade's e-commerce revenue for 2024 was approximately $61 million USD, down slightly from the prior year, with a growth projected of between 0 to 5% for last year. IBS World identifies Long & McQuade as the dominant player in Canada's musical instrument retail sector, and notes that competition in the segment is moderate and increasing, a signal of market pressure. This is like the biggest company we have here in Canada. They're staying afloat, but we're seeing companies like Steve's Music in Montreal shutting down. I think there was Cosmo Music as well that shut down here in Canada. So the big players, they're doing okay, but to say that they're thriving would be kind of an overstatement at this point. Reverb.com is different than all the other companies in the sense that you and I go on this virtual marketplace and we sell what we have. Basically, very similar to what you would find in your local classified ad, except it's worldwide. And it doesn't seem like they are as affected by everything that's going on in the world compared to the mom and pop shops and some of the bigger companies. If you pull up some of the available data for Reverb.com, it's quite interesting because you're seeing that they outperformed a lot of the bigger guys. So what I could see here is that in their first quarter of 2024, they were outpacing their previous years from 2023, with sales increasing by nearly 50% over the prior period. The UK market alone saw a 13% increase in sales in the first quarter of 2024 compared to the first quarter of 2023. Furthermore, here we have Reverb reported that approximately $917.9 million in gross merchandise sales in 2024, with roughly 80% of platform sales attributed to used gear. Reverb also reported over 30% year-over-year growth in outlet guitar gear sales during quarter 4 of 2023, with sellers' activity significantly increasing pre-pandemic benchmarks. Here's what that actually means. People are buying used gear, not new. They're hunting for deals, not chasing the latest boutique releases. Reverb's own marketing has explicitly pivoted to affordability messaging, the platform growing while new gear retailers stagnate or decline. It is a signal of market frugality, not market enthusiasm.